Welcome back, investors, to Ticker Time News. I'm Adam, and the long wait is finally over as the SEC has approved two new Bitcoin Futures ETFs, one from Valkyrie and the other from ProShares, which could actually begin trading as soon as Monday, October 18th. Now, we could actually see four futures-backed Bitcoin ETFs trading on U.S. exchanges by the end of this month, with approval deadlines for Invesco and VanEck also approaching. These new exchange-traded funds will make buying and selling Bitcoin easier than ever before, so you can profit from the rise of Bitcoin without taking on the risk of buying Bitcoin yourself directly. Although these ETFs are not physical Bitcoin ETFs, the SEC will decide the fate of physical Bitcoin ETFs next month. So let's learn all about Bitcoin Futures ETFs, whether they're the right investment for you, and what this all actually means for the price of Bitcoin. Is Bitcoin going to the moon? My personal goal for this channel is financial freedom through education for all, and I need your engagement to help reach as many people as possible. Please take a few seconds to share this video on your social media accounts to help your family and friends reach financial independence too. A Bitcoin ETF has been a long-awaited financial vehicle for Bitcoin investors. Bitcoin prices have been fluctuating wildly in the past year, and this is great news for Bitcoin investors who are looking to make some profits from their investments. The SEC has approved two new ETF applications, the Valkyrie Bitcoin Strategy ETF and the ProShares Bitcoin Strategy ETF. The ProShares Bitcoin Strategy ETF will trade under the ticker symbol BITO. The two Bitcoin ETFs will finally allow people to invest in Bitcoin without having to go through the trouble of buying it on an exchange like Coinbase or BlockFi. The Winklevoss brothers of Facebook fame tried to create a Bitcoin ETF, but the SEC has been dragging its feet on approving a Bitcoin ETF for years, since at least 2013. Now, the SEC is finally allowing Bitcoin to be traded as an ETF product on financial markets. So, what is a Bitcoin Futures ETF? Since this is trading in Bitcoin futures, it's not as straightforward as this new Bitcoin ETF buying Bitcoin outright. Of course, it's not. I know. First, we need to understand that futures are an agreement to buy or sell an asset on a specific future date at a specific price. So you have two parties where one must buy and one must sell at the designated price at the contract expiration date, regardless of what the actual market price of Bitcoin is. The objective here isn't to maximize profits, it's a risk management tool that's frequently used in financial markets to protect against the price fluctuations of assets bought and sold on a regular basis. Futures are also used in portfolios to correct the price fluctuations on assets, particularly those with a high degree of volatility. Those agreements are negotiated and traded on a futures exchange, which serves as the link between buyer and seller. There are two positions you can take on a futures contract: long or short. If you take a long position, you agree to buy an asset in the future at a specific price when the contract expires. When you take a short position, you agree to sell an asset at a set price when the contract expires. A good way to illustrate this is using the example of a trucking company that wants to hedge against the rising price of fuel by entering into a futures contract. Let's say fuel costs $2 per gallon, and a trucking company believes that the price of fuel is going to rise, so they buy a 2-month futures contract for 1,000 gallons at current prices. The contract, well, it's worth $2,000. If in 2 months, when the contract expires, the price of fuel is $3 a gallon, the trucking company saved $1,000. The supplier will happily enter into a futures contract in order to ensure a steady market for fuel, even when prices are high. And the same contract will also protect them if the price of fuel unexpectedly drops. In this case, both parties are protecting themselves against the volatility of fuel prices. There are also investors who speculate with futures contracts rather than using them to manage risk. They will intentionally go long when the price of a commodity is low. As prices rise, the contract becomes more valuable, and the investor could decide to trade the contract with another investor before it expires at a higher price. Futures are not just for physical assets, they can be used to trade on financial assets as well. This is where we get into Bitcoin futures. A Bitcoin futures contract will be based on the price of Bitcoin, and speculators can place a quote bet on what they believe the price of Bitcoin will be in the future. This enables investors to speculate on the price of Bitcoin without actually having to own Bitcoin. This presents two opportunities. First, while Bitcoin itself remains unregulated, Bitcoin futures can be traded on regulated exchanges. This is good news for those who are concerned about the risk related to Bitcoin's lack of regulation. Second, in areas where trading Bitcoin is banned, Bitcoin futures allows investors to still speculate on the price of Bitcoin. So a Bitcoin future will work on exactly the same principles as futures on traditional financial assets. What do Bitcoin futures mean for the price of Bitcoin? This is a huge question that many are asking. In the short term, it pushes the price upwards as the overall interest in Bitcoin expands. In the long term, the impact is harder to predict, but in all likelihood, it will continue to increase the price of Bitcoin. And our friend Kathy Wood of ARK Invest has joined the list of Wall Street players hoping the SEC will soon greenlight a Bitcoin Futures ETF too. The ARK 21 shares Bitcoin Futures Strategy ETF would have the ticker ARK-A. Plans to invest in Bitcoin futures contracts that trade on commodity exchanges. This is a no-brainer for ARK because they will be able to instantly seed the fund with about $500 million that they currently have in GBTC, or the Grayscale Bitcoin Trust. Now, one last coin flip. If you're already comfortable buying, selling, trading, or holding Bitcoin, then buying these Bitcoin futures ETFs are most likely not for you. Hear me out. These Bitcoin futures ETFs are more costly than buying Bitcoin yourself. Let's take the ProShares ETF. It said in its Friday filing that the fee for its fund would be 0.19%. The average active equity ETF charges around 0.71%. Look at it like this. If the ETF is charging a 1% annual fee, they are taking $10 out of every $1,000 you invest. Now, on the flip side of this coin, these Bitcoin futures ETFs could be a good fit for you if you want Bitcoin exposure in a more traditional brokerage account. If you want a slightly safer way to be exposed to Bitcoin, Or if you don't want to wait for an ETF that physically holds Bitcoin one for one in its fund. Well, that's what I know about the new Bitcoin Futures ETF. I'm definitely looking forward to hearing from you and what you think about this historic shift. And remember, your comments make these videos so much better. So make sure to leave your thoughts below, and I'll join you there in just a moment. Thank you so very much for watching, and I will see you in the next video.